G'day folks, welcome back to Pete's Investing. It's April 5th, 2024. This is the market update for natural gas, copper, iron ore and crude oil. And as you can see there from the thumbnail, we've got the natural gas has dropped since our last update. Copper and iron ore have moved sideways and crude oil continues its upward momentum. On our heat map, again on the monthly, weekly and daily momentum, natural gas is pretty much mixed, or has broken up into a bullish momentum on the daily, although still short on the monthly and somewhat neutral on the weekly. Crude, US crude and high-grade copper are all bullish across the board, and iron ore is bearish across the board. And they're the other instruments which we may cover in future videos. Just stay tuned for those. First, with natural gas on the daily chart, you can see there it is showing somewhat bullish movement on the CCI 150. That is trending above its moving average band. It made a bit of a jump and it's in this range currently between the support at 1721 and resistance at 2058. So it's midway between that at the moment. Our ADX is also showing us somewhat slightly bullish movement, but just notice on the stochastic market forecast indicator down here, it's pretty much well oversold. On the hourly chart, you can see here closer, it has dropped since our last update. We did draw a Fibonacci between that range. It actually broke up beyond the 61%, which is always key, and it's actually moved sideways along that 61% for a number of hours. And since then, it's actually dropped below this ascending diagonal trend line and currently resting around the in this smaller Fibonacci range. Let me just draw the Fibonacci range there. It actually broke down. We had a bearish divergence here on a CCI 150 versus higher highs on the price. It broke down, hit our target area. Now that target area was initially drawn, let me just redo that, between that low. It's usually the low before that divergence started. You can see there the 23.38%, we hit that and then we actually fell further. It's currently resting at 61% level on that small Fibonacci range. The next range to look out for, if it drops below that point there, that's the 61% identified by that dotted line. So currently it's 50% on that bigger Fibonacci range. So if it drops below there, it's going to get a lot more bearish. So I'll just remove that to make it a bit clearer. But again, you can see the CCI 150 is still dropping off. The ADX is still bearish. And if I zoom out, the stochastic market forecast indicators broken up slightly past the 10 level and now just short of the 25 level. If it breaks above the 50 level, that's a very strong bullish movement on the hourly, and that will help us with this, again, breaking up on the daily as well. Next, looking at US crude. On the daily, you can see here it's broken up past this resistance at 83.12 and still making further upside and drawing a Fibonacci retracement from that high and that low. You can see there it's broken also above that 61% level, again, which is that key area to look out for. So very bullish on crude oil as well. That's monthly and weekly is also very bullish. The CCI 150 again is trading above the moving average band. ADX is also bullish, and if I zoom out on the stochastic market forecast, it's still bouncing off that 50 level, which again it's in a bullish range of movement. On the hourly chart, before I zoom out, first off you can see there since our last update, it's actually fell off below our diagonal ascending trend line, but then it's actually bounced quite strongly and now resting on that diagonal trend line as well. Again, we did have a bearish divergence here versus higher highs on the price. It fell down and that would have hit our target. Now, in terms of a target range here, drawing it from that low to that previous low, you can see there it's actually hit the target, this point between the 23 and the 38% level. But even if I take it back to that low, it's actually just touched that 23% level. So that's always a minimum target area before taking any potential further downside. In this case, we don't expect it to drop much further at the moment, but as long as that CCI keeps falling, there may be a possibility of further declines, but at the moment it's looking pretty strong and trending above this trend line. High-grade copper is also bullish across the monthly, weekly and daily range. You can see here on the daily, it's still very bullish on the CCI 150 above its moving average range, average bands. The ADX 25 is also bullish, and zooming out on the stochastic market forecast indicator, it's also above the 50 level, so very bullish on that side there. We've got this key resistance up here at 43,568, and it's just approaching that at the moment on the daily. It's already broken above this minor resistance at 41,711. On the hourly chart, before I zoom in, first off on the stochastic market forecast, it's in the overbought territory, and that could actually stay up there for some time, but at the moment it's potentially starting to turn down slightly. We did have a bearish divergence here, lower lows on the CCI 150 versus lower highs on the CCI 150 versus higher highs on the price. You can see there it's actually fallen off. Now, if I zoom in, our initial target area from there is around that 23% level. You can see that it's just touched it there. So that's executed and completed. But again, the key area to look out for, if it drops any further than that, the 61% is the key area to look out for. But at the moment, still, again, very bullish across the board. And as I said, the stochastic market forecast is overbought, so we may see a bit of a retrace in the coming days or even hours. Iron ore is the one that's short across all time frames, monthly, weekly, and daily. And here you can see on the daily, the CCI 150 is still trending below its moving average band. The ADX 25 is still bearish, and the stochastic market forecast indicator is breaking below the 50 level, which is a bearish sign as well. It's currently sitting at this 749 support, and as I said in the last video, their next level of support will be this diagonal trend line, and that's across those bottoms there. So it may actually see what happens if it breaks through to the bottom of that, or if it actually bounces from there. That'll be the key area to look out for. On this Fibonacci range, it's actually broken below the 61%. Again, we see how it goes. It may actually bounce from this diagonal trend line, but that's a bearish outlook on the iron ore price. On the hourly, it's actually broken below the 50 level on the stochastic market forecast, so bearish on that. And if I zoom in, you can see there more closely. It's actually, we did have a bullish divergence here between higher lows on the CCI versus lower lows on the price. And we drew a Fibonacci retracement up between that high and that low. It's actually hit our target area between the 23 and the 38% level. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.